This is your technical update from the LMAX Exchange Research and Analytics Desk for Friday, December 5th, 2014. Euro dollar. So the market recently broke down to a fresh 2014 low, with the break below 123.58 exposing the 2012 base at 120.40. Ultimately, any rally should continue to be very well capped ahead of the 50-day moving average, with only a break back above to compromise the bearish outlook. Sterling dollar. Cable continues to consolidate just off its recent 2014 lows at 155.85. A break below would expose the next downside extension towards the 153.50 area, while only back above 158.26 would take the immediate pressure off the downside. Dollar yen. Dollar yen has broken to yet another 7-year high above 120, taking out 120 to trade all the way up to 120.25 thus far. The market continues to track an overbought territory across daily, weekly, and monthly timeframes, and a correction continues to be warranted ahead of any legitimate bullish resumption. A break back below 119.12 would be required to trigger the onset of a correction. Euro Swiss. Euro Swiss continues to consolidate just off its recent 2014 lows at 20.09. The market has since made a little bit of a recovery, but will need to break back above 20.45 to take the immediate pressure off the downside. Inability to establish above 20.45 keeps the market looking at a potential retest of that critical psychological barrier down at 120. Aussie dollar. Aussie dollar continues to extend declines after breaking down to a fresh 2014 low. The immediate focus is on a measured move objective in the 81.70 area. However, deeper setbacks are now expected towards the psychological barrier at 80 over the coming days. Any rally should now be well capped into the 86 area, while ultimately only back above 89.11 would compromise the bearish structure. Dollar CAD. Dollar CAD looks poised for fresh upside and is currently in the process of carving out a higher low around the 1191 area in favor of the next upside extension above 1467. That's the recent 2014 high, and towards a measured move objective of 1750 further up. Ultimately, only back below 1122 would compromise the bullish outlook in dollar CAD. Kiwi dollar. Kiwi has been consolidating over the past several weeks, though the consolidation is classified as a bearish consolidation given the bearish price action over the past several months, and the market is expected to trade back down towards the 76.60 recent 2014 low, with a break to open the next major downside extension towards the 70 area over the coming days and weeks. Ultimately, only back above 80.35 would compromise the bearish outlook. SPX 500. The S&P 500 managed to squeak out another record high on Thursday, trading up to 2078, 2079 ahead of this latest minor pullback. However, there is the possibility now that the market looks to carve a double top formation on the daily chart, with the market needing to break back below the neckline at 2049 to confirm this bearish formation. Inability to take out 2049 or inability to put in a bearish close on Friday would negate this possibility, keep the pressure on the top side, and open the door for fresh upside towards next key major psychological barriers at 2100. Gold. Gold is in the process of consolidating following a nice impressive recovery off of the 1131 base that was established back in early November. The market, however, is still locked within an underlying bear trend and would need to break back above 1256 to compromise that outlook. In the interim, a lower top could be sought out somewhere below 1256 in favor of a bearish resumption back below 1131. That's all for today. Have a good weekend.